Hello and greetings to you, the good followers of broker Trendo. Today, like past weeks, we want to take a look at the events that have happened in the financial markets. Now, let's look back at the week we've just had and also review the conditions we can expect this coming week. So, stay with me until the end of this video. Alright, let's start the video with the most important events that have occurred in the past week. First and foremost, we should take a look at the US dollar, but there's nothing to examine. We had intended to provide some information regarding the dollar, but for the time being, we'll try not to delve into it too extensively. Let's shift our focus now towards Bitcoin and gold. However, we will still offer a few brief points concerning the dollar. The US dollar has managed to reach the resistance level of 100 to 100.22. What we mean by dollar is, of course, the US dollar index, and this very level was a significant support last year. Before the rally we had in the fourth quarter, which then succumbed to resistance in August. In USD/JPY, we were able to observe the 155 selling, and the price successfully broke above this level. This is indeed a significant development, as it has once again generated fear within the market, primarily due to the past interventions by Japan's Ministry of Finance. And for euro to US dollar, the significant psychological level of 1.15 has continued to hold. The price hasn't experienced substantial changes, and crucially, there hasn't been a daily close below this particular level. We'll certainly be discussing gold in much more detail as we move forward. But for the time being, we can mention that it's currently in a symmetrical triangle pattern, which we will also thoroughly cover in our technical analysis section. And now, Bitcoin, which you probably remember. Just last week, the price experienced a very sharp decline, and now it's 36% down from its all-time high. And on the other hand, risk appetite in the market has started to decrease. Let's move on to discuss gold. Gold was able to continue its settlement process throughout this week. And the interesting point here is that so far, we're seeing a series of lower highs, and from that same perspective, higher lows are being established in gold. And that's the trend line, which, following the $4,000 support level we observed on Monday, has been consistently maintained. And as we mentioned, just like in April 2025, we experienced a period of price consolidation. At this very moment, we are observing a symmetrical triangle pattern on gold, a situation that has been seen and documented in many similar previous instances. When this triangle had been formed, the market situation was bullish, and we can lean towards the idea that, well, this triangle might ultimately break out in favor of the price. And now, that double top formation that gold had, it has now been about a month since it was broken. But in previous periods, the process of price stabilization has always taken 2 months. Typically, this kind of situation occurs, and then we observed, for example, that during the time the Jackson Hole meeting was being held, for 4 months from the early part of the year, we were able to see this price equality in gold. So it's possible that the timing more will be needed for buyers to be able to continue to push, as they say, the upward trend in gold. And now we've been discussing various important matters, such as the symmetrical triangle pattern, and from that perspective, the $4,000 support level that gold currently maintains, along with the overall situation that is present. One compelling argument that you could present right now, taking into account the preceding scenario, is the persistent expectation that financial markets continue to harbor optimism that the Federal Reserve will indeed implement interest rate cuts, either sometime next year or potentially even as soon as this coming December. And from that particular standpoint, this anticipated action could certainly exert a notable influence on the market price of gold. We also discussed other important points regarding gold. You can see the support and resistance levels in the image, and we'll talk more about the technical analysis later. Let's take a moment to discuss Bitcoin, which caused significant concern for many people last week, and just as we previously stated. We've witnessed a significant price drop in Bitcoin, and this decline is only intensifying. While we've seen some upward bounces, a clear downward trend has still taken hold of the price. It has experienced a drop of more than 10% in just the past few days. Bitcoin has placed BTC's current status at what could be considered the peak of its largest weekly correction since March. And as we've previously mentioned, it has now experienced a significant 36% decline from its October peak. The price, and we're talking about the previous week. For the past 7 consecutive weeks, Bitcoin has been experiencing a negative trend. And another significant negative point that currently exists in relation to Bitcoin is that the long-term upward trend line, which Bitcoin had maintained for several years, that too has now been decisively broken. And this trend line we typically illustrate it using a pitchfork. Over many consecutive years, within the realm of technical analysis, we have consistently observed that the price has undergone a significant downward correction, even from that particular pitchfork. And these were some of the important points that we needed to discuss regarding market corrections, and also a little about. Let's discuss open interest in trades, or what's known as the Open Interest Index, which has now reached $29.5 billion. This clearly indicates that a very significant number of long positions within the market have been liquidated. And all of these developments collectively point to a situation of decreasing risk appetite in the market. And the Crypto Fear and Greed Index is also in a very alarming situation. It has now reached the number 11, which is the worst recorded figure for the Fear and Greed Index in the year 2025. And now, considering the current state of the entire crypto market, we need to observe over the next few trading sessions as the market unfolds, whether we're going to experience a significant upward move in the short term, or if we'll once again witness a series of bearish price declines, and we will also outline the approximate targets for these movements later on. Let's also take a moment to review our economic calendar and see what's on the agenda for this week. All right, we'll kick things off starting with Monday, where we have 2 significant pieces of data. We have the PPI, which indicates producer inflation in the United States, and we're looking at the retail sales figures, which are key indicators of American consumer spending power. And then moving on to Wednesday, the schedule appears somewhat busier compared to Australia, as we also anticipate the release of the PPI data. We're looking at the Reserve Bank of New Zealand, which is preparing to announce its decision on interest rates. It's widely anticipated that they will cut the rate from 2.5% to 2.25%. Meanwhile, in England, the central bank's comprehensive forecast statement for the upcoming autumn season is also scheduled for release. In America, of course, we also have more data. We'll be looking at jobless claims, GDP, and core PCE, which are key metrics the Federal Reserve considers for its policy decisions. Also, Thursday is Thanksgiving in America, so markets will be closed. And on Friday, we'll get the monthly GDP report from Canada. All right, let's take a look at the gold situation. As we mentioned, we'll also analyze Bitcoin next. For now, we won't analyze gold across different time frames. In this 4-hour time frame, we're seeing the symmetrical triangle pattern, which we said is strong. This is what we have witnessed from April through August of this current year, and then again late last year, spanning from October to December. The historical outcome of such a triangular formation in previous examples has consistently been bullish, and a truly remarkable indication suggests a strong probability that the price will once again break upwards past the apex of this triangle. One significant level that we have is the $4,044 mark, which for 4 out of the 5 days of the past week has served as the primary price support. And the crucial point here is that we haven't recorded any daily close below this specific price point. Now, should the $4,000 level be breached, then in that scenario, we might witness a significant change in gold's price action, specifically targeting the regions of 39.16 and 38.95. This particular red box that you are observing here is designated as our crucial primary support zone. We've also marked a significant spot here at the $4,100 level, which has proven to be a major resistance point for us over the past few days. All the buying pressure and demand have been concentrated right around this particular zone, and the price has made a very strong attempt to break through it. However, we haven't managed to get a daily close above this crucial level on the daily time frame. And in an upward trend, if we break above $4,250, we can hope for a new bullish trend to start in gold as well. Now, let's analyze Bitcoin. Let's go to Bitcoin on the daily time frame. If we examine it here, the pitchfork that I mentioned to you earlier becomes much clearer. Okay, we are now observing the pitchfork, which has been drawn from our Octave tab. This represents the Bitcoin price ceiling that was previously established and clearly drawn. And now the current price action has decisively broken this specific pitchfork formation downwards. Furthermore, we also observed a significant daily low point that was recorded at $80,535. The market price has now firmly registered this particular low, and subsequently it has moved up a little bit higher. Our primary focus is on Bitcoin's weekly close, considering the LWT for the year 2025. Now, by LWT, we mean the lower annual close. Since we are also approaching the end of the year, I typically consider the entire yearly candle to assess the overall situation. But for now, for Bitcoin, our primary focus is the weekly close, considering the 2025 annual close. We also have the Fibonacci 38.2% level, which is positioned within the range of 83,000 to approximately $84,000. And on the other hand, our daily momentum is also currently in oversold territory. But we are saying that the price is currently grappling with these specific issues. In the discussion of resistances, the first important resistance we have is the January low, the number 89,187. This is considered our January floor. And then we also have the 93 and 97 ranges, which will then include our annual open. It encompasses May's low and the annual 61.8 Fibonacci level. And now, when these specific ranges break upwards, especially the 89,187 mark, we can then hope that the overall trend will reverse somewhat. But if we get a weekly close below $84,000, then technically our next significant support levels are going to be, first, this daily low that has already formed. Following that, we're looking at 79,500 and then 78,300. Okay, so now we've also completed the technical review. Let's have a summary of everything we've discussed in this video. What should we focus on this week? First of all, on Monday, we have the US retail sales data, which will show us the strength of the consumer. Also on Monday, the New Zealand Central Bank's decision is extremely important for us, considering that the NZD/USD currency pair can be significantly impacted by it. The US GDP and the core PCE figures are also very important for us. On Thursday, the BFB markets will be closed as well. And generally, you should definitely keep a very close eye on technical breakouts and breakdowns. I hope you have enjoyed this video and always be profitable. Goodbye.